Hi, everyone. Thank you for coming. I'm Ryan Taylor. I'm the CEO of Dash Core Group, Inc. Dash Core Group, Inc. is one of many entities that serve the Dash network and receive funding from its proposal system. I'll walk through a little bit more detail on how all of that works throughout the presentation. But to be clear, Dash does not have a CEO. Dash Core Group consists of about 60 employees and contractors working around the world in a variety of different tasks for the network. That includes the core protocol development, as well as business development, marketing, and a number of other functions for the network. Alongside many other teams located in countries around the world or working on software projects of their own to benefit the network. So what is Dash? Dash is digital currency, obviously, and the network is payments focused. We're focused on bringing in payments industry best practices to bear on cryptocurrencies. For us, that means an emphasis on speed, on high transaction capacity, low cost of transactions, and a particular focus on ease of use. Dash features instant transactions that's very popular with our users. Transactions confirm in as little as 1 to 2 seconds, so very similar to the experience of using a credit card. And that allows Dash to be used in places that other cryptocurrencies can't, like at the point of sale. Just as an example, we have between 2,000 and 3,000 merchants in Venezuela, and that includes the largest department store in the country. And transactions there are much more fluid than other cryptocurrencies because the consumer doesn't have to wait, and that's a very big deal. And as a result, Dash is leading in Venezuela as far as merchant acceptance goes and as far as the number of users that are actually transacting with cryptocurrency. We have a strategy that focuses on use cases that cryptocurrency serves particularly well, and that Dash in particular is well positioned for. Things that take advantage of our speed, low costs. And so a couple of examples there of the strategies that we focused on include high inflation countries. We talked about Venezuela just a moment ago. Gaming, and in particular sports gaming, fantasy sports betting, esports, because they're time sensitive. You can't afford to place a bet and wait to see whether or not it confirms in time for the game. And so we're seeing particular adoption in use cases like that one. Cryptocurrency traders, the ability to move value between exchanges instantly and take advantage of arbitrage opportunities that might not be there in an hour. And so there's a number of other examples. I won't go into all of the areas that we're focused on, but we are gaining traction in every single one of those areas that we've focused on. So I'm going to talk a little bit about Dash's funding model and what makes it different from a lot of other cryptocurrencies. Where we've been over the course of the last year through this crypto winter and how it's affected us. And then a little bit later, Bob is going to walk us through some of the technology updates on what we're working on and what's coming. Dash is pretty unique. We were the first cryptocurrency to really launch the model that we have. And that is that we split our block rewards into 3 different components. One is mining, in order to secure the network, but we recognize that that's only one need of a good payments network. You need good infrastructure, so 45% of our block reward goes towards masternode operators. These are the people that are keeping full copies of the blockchain, relaying the messages around the network. And because those are paid, we have a very high-speed network. It relays transactions around about 100% faster than Bitcoin does, and it also is much higher capacity. We do have a 2 megabit block size limit, but research from Arizona State University has revealed that we can go up to at least 10 megabyte blocks. and they occur 4 times as often. Our block time is about 2.5 minutes. And as a consequence, today we have around 8 times the capacity of Bitcoin's network, but we can easily scale to 40 times. And the interesting thing about the research was they only tested up until 10 megabytes. So we don't actually know where the limit is. And it also presumes the current price. Of course, if the network were being used that much, you could assume that the price might be quite a bit higher. That would fund even better infrastructure. So it has a tendency to feed upon itself as the network grows. That last 10% is allocated towards what we call our proposal system. And what it provides is continuous funding. Much like Zcash's block reward, it continues to fund the network on an ongoing basis. Right now, at the current price, that's about $10 million a year. And that's available to all the projects that serve Dash. It is directed by the network. Every single organization that receives funding has to put a proposal up to the network for funding, and it has to be approved by the network. The masternodes each cast 1 vote for or against each of the proposals. The highest ranking ones pay out first. Dash Core Group is not different. We have to earn our votes the same as anybody else. So we don't have any special privilege on the network. And as you'll see, we've actually held ourselves even more accountable than your typical project. It is secure from hacking. It's not like an ICO where a bunch of money gets collected and there's a honeypot somewhere with someone with private keys. These coins do not exist until the blocks are created as part of a monthly cycle. It's called a super block. It occurs about once a month. And that monthly budget, if it is not approved, those coins are simply not created. And so it is secure from hacking. It's highly, highly accountable, because if you fail to deliver, you're not going to continue to receive funding. And so a lot of the projects receive ongoing funding to operate in a country, conducting marketing, maintaining wallets. We have a variety of different wallets that are supported by the funding model. And of course, Dash Core Group. If we fail to deliver, we could lose the funding that the network allocates to us. And it's also multi-team. So because of the variety of different projects that are vying for this funding, it is competitive. And those projects that are seeing the best results are those that continue to receive funding and continue to be able to operate. And those that fail to deliver do have a tendency to be defunded. And so that makes the project or the funding model very efficient. In terms of what we've gone through with price over the last year, of course, we had a rocket ship last November, December, like the rest of the cryptocurrency space. And what you see here is when that happened, actually, there weren't even enough good projects to go around, and a good portion of the budget was unused. So those coins were simply never created. Dash Core Group in the light blue actually stopped requesting funding altogether. We had enough funding for the foreseeable future and discontinued our funding requests altogether. As the price came down over the last year, the budget system did start to run up against its capacity limits. There were some teams that failed to continue to receive funding. Dash Core Group has had to scale up its funding requests as a percentage of the budget in order to continue our operations. We have taken cost-cutting efforts and cut about 8% of our staff here at the beginning of this year. As the prices come back up, we've started to rebuild our reserves, and we're in a much healthier financial position. As well, you see in the most recent month, a portion of the funding actually didn't get used, so now some of those smaller teams around the world are starting to be able to expand again. There's some available funding for projects to get started again. And so really the funding scales with the scale of the project. As we get bigger, that funding pool becomes more valuable and can deliver more to the network. In the current month, based on our current price, if you were to project that out, it's about $10 million a year in funding. So it is a substantial amount. Like I said, we have 60 employees and contractors, so it is a substantial amount of resources that we can bring to bear for the network's growth. Dash Core Group, as I said, is pretty unique. We are a corporation, and we used to be structured as a foundation, a nonprofit. We chose this structure because it loosens all the limitations around what we're allowed to do, where we're allowed to receive funding from, identifying the sources of funding. That's pretty hard to do when you're a foundation receiving large sums from a network of individuals. You don't know who they are. And so this is a much more scalable model for us. We introduced this back in 2017, and essentially, Dash Core Group issued 100% of its shares to a trust. And that trust beneficiaries are the network itself. And so that established a fiduciary duty back to the network. Essentially, they are our shareholders. And so we have no profit incentive. On a yearly basis, as our balance sheet grows, we may pay a little bit in taxes, but it's highly tax efficient because we're only drawing from the network what we need to operate as a legal entity. The trust itself is controlled, of course, by trust protectors. In our case, those trust protectors are assigned by the network. They're elected positions. We just held our first election here about 2 months ago. And those are trusted community members that have been elected to those roles. And so they have direct oversight over us, and they wouldn't have to go with the nuclear option if they wanted to replace us. They wouldn't need to defund us and destroy all of the value that has been built up and all of the knowledge that's been built up in Dash Core Group. If they don't like the job that I'm doing, they can fire me and simply replace me or other members of the management team, as opposed to defunding Dash Core Group and trying to start another entity from scratch. And so we voluntarily created all of this because it's what's best for the long-term sustainability of the network. So I think we're very unique in that we're, I believe, the only entity that is truly controlled by the network that it serves. But we're not the only one. Over the last year, we've done something pretty revolutionary, and I just announced it last week. We have created the Dash Investment Foundation. The Dash Investment Foundation is the world's first, and let this sink in, ownerless and memberless investment fund. No one owns it, and it has no members. So how does this even exist? Well, it's a new legal entity that was launched late in 2017 in Cayman Islands. An entity can be formed by a single member, and that member can relinquish their membership. And so that's exactly what we've done. And from that point on, this entity that is owned by nothing is held to its charter. And in our case, its charter is to serve the Dash network, either by making a profit as an investment fund or in investing in the ecosystem to make Dash more useful and strengthen the network. And the way that it works is there's a statutory role called supervisors. They're also elected by our network. So there's 6 supervisors, and they oversee the fund. And so they can invest in companies that are building businesses that utilize Dash, that add new functions to Dash. They can invest in anything, the stock market. And essentially, it can continue to reinvest all of those funds. one of the things that we grappled with was how do you actually get returns back to Dash holders? And the way that we solved that problem is, well, there were two ways to do it. You can either require everyone on the network to go through KYC AML and provide their information in order to participate. The more elegant solution is that entity, if it ever wants to do a distribution to Dash owners, is simply going to buy Dash and destroy it. It's a lot like a share buyback. It should have an effect on the scarcity and price of Dash. And so it's a pretty unique entity. We believe it's the world's first ownerless and memberless investment fund. And that's pretty mind-blowing when you think about it. And with that, I'll turn things over to Bob to give us an update on where we are on the technology side.
Thank you, Ryan. My name is Bob Carroll. I'm the CTO for Dash Core Group. And I want to take you through a little bit of our innovations, some of our current releases, and our future roadmap. I'm very excited to be here today to talk to you about these things and report back on really the last year since we were at Consensus. As Ryan discussed, we have a history of innovation in our organization. The masternode tier is not unique now amongst altcoins. However, we were the first to implement it. And as I walk through the features that we're developing and continue to develop, you'll see how much of our roadmap is based on that infrastructure and how critical that is for successful delivery. About a year after we introduced the project, we released Instant Send. Ryan announced that. The way that works is we were able to utilize our masternode tier to form a small quorum of masternodes. They were elected each block. So every time a new block was started, there would be a set of 10 masternodes that were assigned. And those masternodes would be the first ones to receive a broadcast of a transaction if that transaction was marked as an instant send transaction. Instant send transactions had a little extra transaction fee, but it provided the priority to ensure that that transaction was known and that there was no uncertainty with it. That's important because it set the foundation for some of our features that I'll talk to you about in a moment. And then Ryan also talked a bit about our 2 meg block size that was introduced. Our current roadmap, which you can find on our website, dash.org/roadmap, is listed here. And in January of this year, we released our version 13 release to mainnet. Version 13 was our second major release in about 6 months. The previous one was in July, and it implemented some very critical features for us for the future. The first one that I want to hit, and I won't take you through the list in chronological order, but was special transactions. We all know what we can do with opcodes. We can do just about anything and do it amongst scripting. What we wanted to do was surface some of those things that were most critical to our network through special transactions, and those were implemented at the protocol level. We'll talk a bit more about them, but they are going to apply to blockchain identities and as well as the deterministic masternode list, which was also implemented in version 13. The deterministic masternode list, as I talked to you, I said that we used a quorum of 10 for instant send. We knew that we had other uses for quorums to have consensus amongst our masternodes and that we needed some flexibility with that. But we needed to know who were masternodes. The masternode is any node that can prove collateral of 1,000 Dash. 1,000 Dash is significant, right? That's based on today's price, it's $140,000. I wish I could take you back on the roadmap when it was $7,000, but I can't do that. But it's a significant investment for those who are going to protect our network, and they have a critical role for us. But we couldn't deterministically tell who they were as they came and went until we were able to implement special transactions, and that's why it's so critical for us. You'll see some other features on there. We talked about instant send if people wanted to pay an extra fee. Well, we decided that we could actually reduce fees as we're trying to deliver on our mission of giving financial freedom to those who use Dash. And we put in automatic instant send. So if we could see that a transaction was simple enough, which we defined as less than 4 inputs, that we would automatically upgrade it to an instant send transaction without that fee there. So those were some of the features that were put into version 13. And right now on testnet, we have our version 14 release available. This is due to be put on mainnet within the next 30 days. We have our final release candidate out there right now. This marks about a 4.5 month time period between major releases. And I emphasize that because we've seen an increase in velocity of our delivery to the network. And as Ryan talked about the funding mechanisms, that allows us to do that. The ability that we have to fund the Dash Core group and the developers that support the network allows us to introduce these features. In this, we have introduced what we're calling long-living masternode quorums. The quorums before for instant send were single purpose. They were very short-living. They only lived for the duration of the block. Ryan mentioned we have a 2.5 minute block propagation period. So that quorum came and went every 2.5 minutes. We're now putting in place long-living masternode quorums to support the future of decentralized applications that will be built on the network, stateless, that they'll be persistent for longer periods of time. And we can do this because we have this deterministic list of vested stakeholders in our network. We're also, our first use case of long-living masternode quorums is the introduction of our ChainLocks feature. I've got a whole slide on it, but it protects us against 51% attacks, and that is a very topical situation that we have right now. Our follow-on release to version 14, which is slated this year, but just based on timing, we don't have our current release that's in cycle. I don't have a date to give you as far as when that will hit testnet, is our version 1.0. That is a culmination of a vision that has been called Dash Evolution. It's the culmination of multiple development teams' efforts in developing a platform which we'll take you through in the next slide. ChainLocks, which is part of our version 14 release, was not just a security feature. The security around it and preventing a 51% attack is incredible. The reason we can do that is we know the 51% attacks are attacks on the mining with miners. We have a second tier, right? We can always calculate what a rentable hash rate is and the costs associated with that. But when you layer a second tier on it, let me just walk you through the math, it would take an investment of hundreds of millions of dollars to attack the network. So you have to think about the payload of what somebody would be incented to do that they think they might be rewarded with to raise hundreds of millions of dollars. We have about 5,000 masternodes. You need 1,000 in collateral. At 140, there's 700, 800 million of price, of value in our masternode network. The 51% of that takes you into the 350, 400 million range in order to attack that network. By implementing ChainLocks on top of the mining network, it prevents that. It doesn't prevent it technically, it prevents it socially unless somebody has a reward greater than the $350 million. The way that we're doing this with ChainLocks, similar to how we locked a transaction in instant send, we are locking a block to a particular block height. So we'll always know based on the hash of the previous block where it is. We use a quorum of masternode owners to identify and form consensus about what the previous block was. We don't have to deal with longest chain and competing chains and race conditions on the network. And this is all done at the protocol level. So we're very excited about what ChainLocks offers to us from a security standpoint, but also from a user experience standpoint. Because now, as a transaction is sent, those funds can be re-spent immediately because that block is already confirmed on our network. I'll just wrap with Dash Evolution, which is our next major release after 14.0. And Dash Evolution was really a vision that was outlined a couple of years ago for Dash and where we wanted to go. I think Ryan did a great job of articulating what our focus is on payments, what our vision is as far as financial freedom, and speed and transparency on the network. And Dash Evolution really delivers on that. And I'll talk about three major components of what Dash Evolution delivers. The first is blockchain identities. And I'll reference right now, just so I don't forget it at the end, a couple areas that you could look to for additional research. In our GitHub repo, which is Dash Pay, github.com/dashpay, there's a repo called DIPs. Those are our Dash improvement proposals. And if you look under DIPs, we released DIPs 2 through 8 in the last calendar year. And those referenced special transactions, long-living masternode quorums, ChainLocks, as well as blockchain usernames. The blockchain username is an immutable identity stored on layer 1. It is going to be used for transaction payments to be able to transact with your friends by a common username as opposed to a cryptographic address. It'll also be used for storing private data off-chain in the decentralized apps which are part of Dash Evolution. That's DIP 5, and if you want to learn about our identity strategy, you can look at it there. The other two components of Dash Evolution are really the platform, which comprised off-chain data storage, leveraging, again, our masternode networks. You have to think about where is this data being stored. It's being stored on the masternodes and their infrastructure, and a decentralized API to be able to access that data through the dApps or decentralized apps that will be part of the Dash platform. We've chosen open technologies. We've chosen JSON for data structures. We've chosen HTTP for an open API protocol to take us above and beyond the limitations that exist in peer-to-peer messaging and some of the port blocking that happens. We need, if we're going to achieve financial freedom and independence and that acceptance and accessibility of Dash, to be able to operate over those standard protocols. How can we do this? We have an incentivized second tier. With the masternodes, they enable that. With our developers, which as CTO, I can tell you I'm extremely proud of the team. They live everywhere except for New York City. And so they're not here today. We do have members of our product team here. But I'm extremely proud of them because during this crypto winter, we've stayed to our focus, stayed to our vision, and are well aligned to not only have delivered more releases during crypto winter than we have off winter, but are well positioned to deliver on the vision that is evolution. So with that, I thank you very much and have a good day.
All right, thank you very much. I think we have about 1 or 2 minutes here. I don't know if anyone in the crowd has a question. I can bring the mic over to you.
I'll let you.
Awesome.
Yeah, I'm more interested in the fact that Dash masternodes are just sending uptime proofs at the moment, a simple ping to the network to show that they're alive. Are you going to expand the testing system that Dash masternodes use when you expand the functionality of Dash masternodes essentially to do more things? Because it seems like the uptime proof might be too little at the moment.
Yeah, I'll take that. So right now, we have limited proof of service that we're implementing with that, and we'll continue to expand on it. Ryan outlined our current incentive structure and the way it's laid out. What we have is really the makings of something that would allow us to be very flexible with that, to change the incentives to enable proof of service. But right now, we need to make sure that they're storing the data and they'll have that data accessible. That'll be the biggest thing with the evolution delivery, the 1.0 delivery, is once they're storing data, they not only just have to be online to ping, but they also have to be able to deliver that service as well.
All right. Unfortunately, I think we're actually